U.S. economy recovery slows. Thank you for joining us for another Bank of Cardiff newscast. New figures released by the Commerce Department show that the U.S. economy slowed to a virtual halt in the final 3 months of 2015, its annual rate rising at just 0.7% amid signs of a global economic slowdown. Consumers and businesses alike scaled back their spending and U.S. exports were reduced. The lower-than-expected rate is likely to fuel concern that gains made over the last 6 years are now losing ground. It's not the first time fourth quarter figures have shown a slowing in growth, often followed by a bounce back in spring, but this time the data appears more worrying against the backdrop of global stock market turmoil, which in turn is fed by fears of continued economic slowdown in China and plummeting oil prices. It's enough to dampen even the most optimistic growth forecasts. The doom and gloom is certainly a sign of the times, and there are plenty of reasons to suspect a blip in the progress of post-recession recovery. In addition to the disappointing GDP numbers, U.S. manufacturers have also reported declines in new orders and mooted the possibility of large-scale layoffs, while a further slowdown in China's manufacturing sector is still causing concern across the globe. The Federal Reserve left interest rates unchanged this month after nudging short-term rates up in December following a period of record lows. It's thought that economic fragility, coupled with downward pressures on inflation, will force the Fed to take its foot off the rate hike pedal to avoid scaring the horses. So, what's the outlook for 2016? Taken as a whole, the economy probably grew in 2015 at a similar rate to the previous year, and forecasts point to another year of modest but stable growth for 2016, although odds on a recession aren't as long as they might be. If the economy is to get a boost this year, it's likely to come from consumer spending. Steady and sustained job growth may just encourage consumers back to the stores. If strong job growth can suppress unemployment and increase wages, the extra consumer spending power, in turn, helped by rock-bottom gas prices, may support economic growth. It's hoped that the strength in the domestic economy may offset weakness in exports and in the U.S. energy sector, which has suffered heavily as a result of the collapse of oil prices. So what about China? The Chinese government has made a series of interventions over the past 12 months in a desperate attempt to shore up the stock market and inculcate confidence among domestic and foreign investors. More measures are expected this year, but with commodities prices remaining volatile and manufacturing on the back burner, there's still plenty of uncertainty about China's progress. Added to its woes is the slowdown of neighboring emerging economies and the additional pressure of the decision by the Fed to raise interest rates, which has affected currency, bond, and stock markets. It'll be interesting to see how China responds to its latest economic challenges in the year ahead. Well, join us later this week for another Bank of Cardiff newscast. And remember that all of our newscasts are available on our website, www.bankofcardiff.com/newscasts.